morning, good evening, wherever you are. Welcome into the live stream here, pre-market on a Wednesday. Hope you have had a good week so far. This was a week with a lot of action and definitely had quite a few trades that I could take that had made a great impact after the Monday session that we were talking about. So this week, a big winner on Tesla, which I completely took profit on. As I had mentioned through multiple sessions, that I even showed it to you guys, the millions of dollars of puts that came in on Tesla, right? And that was a simple one, straightforward. The trend has been bearish, the sentiment has been bearish, so we went along with that. 150 puts for 17th May with a lot of delta left over, and 71% on that. Actually, I fumbled a little bit, not gonna lie. It was closer to around 100%, but then I fumbled a little bit throughout the day. Ended up closing out for an average of 71%. So that was a nice little trade. SPX puts intraday. There was an intraday breakdown trade that we took, and then I tried to play the bounce, and then I lost 300 bucks on that. But that's okay, because net there was still about $1,000 gain. And then you had an IWM put that we took yesterday for a day trade / swing into the next day, which was another great trade. Now, for those of you that took the VIX positions, right, you should have been in profit yesterday, right? And if you did play VIX, then that would have been about 25% yesterday. Personally, I scaled out a little bit of the position, and I'll let the rest of it ride a little bit longer because we have till July, and quite frankly, we're going to get a couple of bounces here. So let's get into the meat and bones of today's session. I hope that you guys are kind of prepped. If you're not, it's all good. That's what you're here for. I'm trying to help you guys get prepped for the pre-market. So very simple that we spoke about in the previous session was that the range between 50.46 all the way to 55.115, this range is a dual zone plus a demand zone. It's going to be a strong level bounce for a potential bounce to the upside. And this bounce could be a terrifying bounce, right? Because you have a lot of room to move to the upside. In fact, don't be surprised if the S&P 500 comes back all the way to 51.80 at some point of time during this week or the next week, right? Because it has a lot of liquidity that it needs to kind of siege, okay? So I would say that there is a very high chance that we get a bounce here of some kind, right? Because the demand zone is very strong. This is a dual zone, a lot of previous liquidity here. I would be expecting a bounce here at least back up to 5115 or 5113. Let's just call it 5110 for to be very, very simple and easy to remember, right? And then we see what happens at this point. If we break further than that, then that opens up 5150 as the next target point. And if we break above that, then we are likely to go up to around 5190. Okay, so you have kind of 3 pivot points here, which we'll be looking at in the next couple of sessions for the upside. Okay, and we have to validate in between. So don't expect this to go crazy, right? And then for the downside is if we have a break of 50.83 or 50.85, but then a rejection of 5115. Okay, so move up, reject. That could be an entry for another short down into the 61.8 extension at 5,000. Okay, that's your downside pivot, further downside pivot. Or we just don't even break 50.85. We fail to break this, or we form some kind of a bear flag and then break eventually down here and try to force a double bottom or some kind of a situation here, and then eventually sellers take over the market and push it down into 5,000. So that's the two scenarios I'm looking at in terms of the S&P 500. Now the NASDAQ, very similar looking chart, but not the same, right? This broke finally, right? What did we speak about the previous session? I spoke about this level being the very key level, right? And once we broke this level, that was the level which we were looking at to come back and validate, right? This was the validation level. For those of you that are listening on in here and you have been attending the live streams and you can follow along with what I'm saying and you understand what I'm saying, could you very quickly put a hey or something in the chat so that I know that you're actually listening to what I'm saying and also following along through the sessions? Because I kind of want to also know who is kind of listening and who is paying attention to what I'm talking about here. These are all very simple rules to engage the market with, and just kind of simple ways to think about how supply and demand have been interacting with this market. So as I said, this is the key pivot, right? We broke, came back, and we need, now there's two things to be done here, and that's the whole essence of today's live stream, is to talk about the fact that both the S&P 500 and NASDAQ are at a key pivot point, right? And when we are at key pivot points, there is a very simple dynamic that is underplayed, right? What is the dynamic? There is a market maker imbalance. Why? Because a majority of people are short all the way down to here, but as, let's say, majority of people are short, right? They're in a negative delta environment. Then the market maker, who is taking the opposite interaction from this, is in a positive delta environment. So the market maker is incentivized to push this to the upside now in the short term, but then will want to create its own liquidity once again at around the next key pivot point. So this is the reason why you always take the key pivot point as a point of maximum profit, because you can set a stop loss and then ride the upside here. Now, the NASDAQ upside to downside risk to reward ratio, just a heads up, it's not that great, okay? It's not that great. Let me show you what I mean. Let's say even you enter the trade here where you are, right? And you keep a stop loss just, below a non-obvious level, the risk to reward ratio is going to be about 1.41, okay? Compare this to the S&P 500, okay? And let's say you enter at the break here, obviously, right? Or somewhere a bit above that, right? This risk to reward ratio is even worse back up. It's a 1:1 risk to reward ratio, okay? The only way this works is if you shorten your risk profile and then bring down some of your take profit lower as well. This is the only way this trade will work. And because we are in the current range situation, right, you can see that this is a range. Where's the range? The range is, this is the top of the range. This is the bottom of the range. We need a move past either one of these points for us to validate. Further downside, further upside, right? So we need a bounce, we need a rejection, something of that nature in order for us to see further movement here. So this is a difficult one, because you take the upside, you better not be swinging it. You better be taking a day trade or a scalp, right? And if you, the same thing goes with the NASDAQ here. If you're playing the pivot, you have to wait for this break, and you're only playing a scalp / day trade. You're not doing a swing trade here, okay? Swings are going to be dangerous in this environment. IWM, we spoke about this 2 weeks back, about 2 weeks now. And, the $200 level is where we were hoping to hold. We were hoping to hold in this range here. And then we broke below it, right? So now IWM is likely to come down to around 189, 180, and 190, somewhere around here, right? Let's just call it 190, right? This is the level. And it's going to draw on some of this liquidity probably if it doesn't get a pullback in the short run. So this 4 hour on IWM looks pretty oversold here, but it can get more oversold. But the next pivot down is going to be about 190. So that will be the key level I'll be watching. If we can get a snap pullback into 198.50, I might be okay with taking some more short exposure here if I can see a rejection, and then short this down ultimately to 190. So that will be a key pivot point. I'll be watching on IWM for a reversal play, for the rejection and continue to move down. But if we are looking for a continued burst higher, then I need 198.50 to become the key pivot point for the upside bounce now. You see how this works? That would mean a breakout structure, some kind of a validation of 198 as support, right? So these are usually my rules of engagement. Like this is the way I look at the market, right? It's all waves, right? Wave, 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 right? The market is constantly blowing out, blowing in, breathing out, breathing in, breathing out, breathing in, right? That's how the market breathes. So it's almost like it's breathing its own lungs and creating a movement. And for those of you that don't know the basics of wave mechanics, always remember that the shorter the breath in, the larger the breath out. The longer the breath in, the shorter the breath out, right? And the medium the breath in, then, you know, the medium the breath out. This is because when you have an impulsive wave or a corrective wave, so the correction wave always depends on what kind of a wave you're looking at, right? If it's a bullish wave, right, then the pull-in waves are called the corrective waves, and the waves moving up are called the impulsive waves. So whenever that's for a bullish scenario. So when you're looking at a bullish scenario, you always have to have a one wave that is the longest wave, which is the third wave. So wherever you're looking at in terms of wave structure, always try to understand which part of the wave you're in, right? Like here you can see because it was in a bullish wave, right? This is an impulsive wave and then a corrective wave. A impulsive wave, a corrective wave. Impulsive wave, corrective wave. Impulse, correct. Impulse, correct. Impulse, correct. Sideways. Impulse, correct. Impulse, correct. Impulse, correct. Impulse, correct. Impulse. And now, because of the break of structure here, right? This becomes a impulse wave. The wave down, breaking a structure of previous support, moving downward. Now this considered the impulse wave. So now you'll be looking at a corrective wave, right? A corrective wave. So try to understand these things. Try to understand. Okay, is this an impulsive wave or a corrective wave? If it's a corrective wave, then it also depends on how long the corrective wave goes on, right? If it's a short corrective wave, a shorter corrective wave, then the next impulsive wave becomes longer. If it is a more medium-sized corrective wave, then the impulse wave becomes shorter. And then if it's a longer corrective wave, the impulse wave might not even break the structure, right? Because what does this show you? It shows you supply and demand. It shows you how the price action is not able, like if after a big sell-off, a bigger buy up happens, that means that this trend is not strong, right? Why? Because buyers are able to step in and cover back price all the way back here. That means that a lot of sellers are out of the market and now buyers are taking over the market, right? But if you have a very short burst of buyers, then what does that mean? That means sellers are still dominating this market. Buyers try to buy up, but then not able to buy up because there are still sellers present. And then that causes another round of selling. And in between that, you'll obviously have some kind of a medium component. Now, I didn't mean to ramble there. I was just hoping that some of you might find value in what I just spoke about. But yeah, I don't mind, throwing tidbits of this in. So your macro structure and technical structure, thinking about today, I would like a pull to the upside. Of course, I want some kind of a pullback here. Hopefully a market open to kind of give us a better entry if possible. But I wouldn't be honestly pissed if I missed this or anything, because I'll be more interested to see what happens up here or up here at 5115 rather than trying to chase this wave to the upside, right? US 10-year yields still at 4.6%, so this is still pretty high, and if it breaks 4.7%, then it's going to get up to the 4.8%, 8.75%. And the dollar index is almost peaking here in a very large impulse wave, right? So it has quite a bit of room to go at 107.138. So this additional move to the upside, if we get a couple of like maybe cool off days or something, the dollar hangs out here a little bit, and then makes a push for it in the next couple of days, that's also a possible scenario. The VIX is cooling off, right? Another one that I'm looking at, inverse ETF, SQQQ. This one goes up when the QQQ goes down. You know, it's trying to break out. If it does break and hold above, you know, it has had significant inflow the past couple of sessions. I will be okay to take some $12 calls on these, or even $13 calls on these to play some upside here. Apart from that, net, this is a pretty decent setup in a pennant style. AMD broke below but didn't really find momentum. This kind of a setup, it scares me. When I look at this, I don't like to play these setups. Not very straightforward, right? I don't want to take that. United Healthcare, somebody asked me about this, and it was in the demand zone, and look what happened. It bounced 6% the next day. Crazy, right? And then Tesla, right? This one has been burning away for the past couple of months. Now, as I have mentioned before, the first time I told you guys to buy Tesla in this year was when it got to around 170, 180. This was the first time, right? Then it came down to 160 again, and I told you guys this is another time to buy Tesla, right? Now Tesla is at 158. If you haven't added Tesla to your long-term portfolio, this is another opportunity to add Tesla, okay? You can add Tesla here, as if you haven't added any shares to your portfolio, this is a good price to buy it at, okay? And even at 130, 140 will be another opportunity in the future, hopefully, to buy it at. So you can add some here and then add some later if it drops lower. Don't try to catch the bottom. That's a stupid game to play, okay? Because you're not going to be able to catch it. So don't try to. Buy it in blocks, buy it in tranches, and that's the best way to do things, okay? Right now, what you're going to see in this market environment is you're going to get a lot of opportunities to purchase some discounted stocks that are in panic or selling mode. And as long as their businesses are intact and they have a good business structure, I don't think that you should listen to the market and what the market's trying to price it at. I think you should use your own brains, because there's a moment in time where technicals and fundamentals are going to be disconnected. And this is kind of turning into one of those times, okay? So just letting you guys know that, you know, as Tesla moves down to the 150, 140 level, this is a decent time to add shares of Tesla if you haven't yet, and you want to own this business, okay? Lockheed Martin, we've seen an insane amount of bullish flow on this, and I think honestly I might take a stab at going for some cheap calls, out the money calls perhaps, to play this upside. There is a potential breakout that's on the brink. Apple just, you know, flirting away with its right shoulder and neckline, right? This is like a huge ass head shoulder, right? So it could break. If Apple breaks down here, then obviously you know the S&P 500 and Nasdaq are going to come further down. Just FYI, if Apple comes down to 157 or around 155, I would be happy to purchase the shares in this business. Okay, I would be happy to purchase shares in this business. So I would be buying Apple at around 155, 150 to 155. I'll be happy to take some shares in Apple. But I won't add it now. I will wait for this to go further down. It's still not an attractive price for me. PayPal, this is another one that we've been talking about for weeks. It broke further down yesterday, came back up after that. So very undecided here, but if it can, you know, break back down below 63 or 64, I would be okay with potentially taking a short position, but this needs more confirmation. This is just very choppy. It faked out. Everybody came back up but down. I need more confirmation here. Amazon, there was more bullish action, but price action has not been really paying it, like, you know, the same, playing out the same way. And then you have Microsoft, still very strong. You have Google. This setup I actually like for a potential short trade. I'm not gonna lie. This is a nice setup for a potential short trade. Parabolic movement, big gap in between. You know, this could very, very well drop really hard if it can break below its 152, 151 range. But if it bounces here and goes higher, then, you know, it's going to continue its price discovery. So You know, it might go up to touch the tippy top of this trend line here and then eventually kind of come down. So I'm being a bit patient with taking a short position on Google just yet. And the same thing goes for Netflix. The same thing goes for Meta. These are very strong stocks that you don't want to short unnecessarily, right? They are like the bread and butter, okay? Salesforce is another one. And yeah, so that's much of what I have today for you guys. If you can leave a like on your way out, that'll be cool. Good morning, how's it going? Always pay attention to your teachings. Thank you, Dylan. Santosh, yes, good morning, T. I'm taking notes. Cool. Hey, yep, good info. SMCI for earnings. Oh, you're are you trying to gamble, or are you like taking it legit? Like, I need to know if you if you want to play it legit, or are you just gonna gamble? Super micro. This earnings is 30th April. You know what? If you go look at the options chain of this one, I'm pretty sure that one way that you could play this is you could do a straddle, but you sell the straddle. So in other words, what you do is you sell a ridiculous price option, but you sell two of them. Like, 1,400 calls, or you sell 700 puts. You know what I mean? I'm sure people want to bet on equal sides here. So you could, if you want a more secure position though, you can create a credit spread on both sides. You sell two out the money credit spreads. I think that would be a good way to play SMCI. That's my 2 cents. All right, well, that's all I have for you guys today. I hope that you have a good rest of your day, good trading session, and we'll see you back on Monday for another one. So if you have any questions, drop them down now. I'll wait around for like a minute, see if you have any questions. If you want me to look at a chart, you want me to, I don't know, do something else, you want me to dance, you want me to do the catch-up song, can do all of the above. Bitcoin is still flirting with the 60,000, 61,000, whatever this level is. And apparently the halving is happening, or happened already. I don't know. Did the halving happen? Am I taking Friday off? No, I'm not taking Friday off. Why? Oh, Mark, we don't do live streams on Friday anymore. We do Monday and Wednesday now. I've reduced the Fridays because the Fridays are days in which I usually have other commitments in the nighttime. Things relating to wedding planning, things relating to spending time with fiance, etc., etc. So I take that time to myself most of the time. And Fridays are typically a wind down day for the market. It's not typically a wind up day for the market, so I take Fridays to myself now. In the future, I might add it back though. Alright guys, have a good trading session, and peace out. Talk to you soon. Bye.